Let's do it.
Okay. Going right through that, kind of the one thing that does go with psychology, and you've mentioned this before, which is position sizing. So how does position sizing, because we can all talk about the math, everybody can talk about the math, that's very easy, but how does position sizing affect a trader's psychology?
I don't want it to affect my psychology. I want each one of these trades to be sized based upon their volatility at the moment of entry. I want to have a lot of trades on. I want them to be insignificant. I think that's one of the keys. When we traded 20 markets back in the 80s, it's difficult for each trade to be sort of insignificant. But now it's much easier because really I risk 15 basis points per trade. And I need that market to go a long way. I really do need the volatility to pick up to where this small trade becomes a bigger trade because it's really moving and it's really having this parabolic or this move we haven't seen before in a while, at least. But I really I want this sizing in each position to be sort of inconsequential. I'm not even thinking about it. So let's say I do something in the currencies, which I'm pretty much short every currency now because the dollar is strong. Then I need that entire sector to go against me. I need something outrageous to happen in order to feel bad about all those small trades. And I'm not saying it won't happen. And likewise, in order to really make good money in those currencies, I need some of them to really have some big moves. And so the yen was sort of doing that recently where it was short as well, but it started going down a lot more than all the rest of them. So that's a key characteristic of, you get some of the grains, they're all moving up since the late 2020, but only a couple of them went a long, long way. So, yeah. And really, you have to shut off you have to really convince yourself once again that you are focusing on rules. And another thing that people do essentially, is they say, well, I'm taking small losses and I've redefined a drawdown in a really profitable trade as a loss. Mm-hmm. A loss. It's not risk. Risk was taking that, 20 or 50 basis point loss. Well, these trades are so profitable, that's gone.
Yes.
And so you want to allow this volatility to happen and not call it risk and not be freaked out by it and follow your rules in order to maximize that profit. So psychologically, that is so tough to do. And the position side, and that's what they're sort of saying, the vol management people. Hey, psychologically, this is difficult. It's hard for me. It's hard for the clients. And this is sort of traditional portfolio management. And then we say, well, we're not doing traditional portfolio management. This is better. This is a realization that the world is a crazy place. Trends that happen that you've never seen before in ways that you've never experienced before, with fundamentals that have never happened before. I mean, every day, almost every year, we're reminded, wow, we've never seen anything like this before. With its COVID, Trump, all of these things that hit us, these fundamentals, out of the clear blue, and that's what trend following is. We make money when things happen we've never seen before.
Yes.
And how can you do this without knowing? Well, you do it by hitting those breakouts.
Yep.
That's it.
Yep.
Hit that breakout as soon as possible. Do not wait for the dip. Do not wait for a small sell-off. Get it done as quickly as possible.
That's a great point. And kind of, what you said about kind of 2020, super interesting time to kind of talk about trend following, because we get to the end of 2020. If you talk, it was kind of funny because I shared this with my group a couple of times. But if you looked at the analysts for Wall Street, they were talking about if Biden wins, you want to buy tech, you want to buy solar, you want to buy all these things. And if Trump wins, you want to buy banks and you want to buy energy. And it's kind of funny. It was the opposite thing that ended up happening. And simply put, like you could have just bought the breakouts, not really cared, and called it a day because there was no real, if you really want to get back to it, the world looked scary at that time to most people. Most people, if you looked at it from a fundamental angle, could you see oil hitting $100? They would say absolutely not. But all this time has gone by, we've seen the energies go crazy, absolutely crazy. Heating oil has been a huge one, natural gas being another huge outlier. And so you have kind of this huge trade that happened where nobody would have seen it. Nobody really saw it coming. So it's kind of interesting. The way to look at it and kind of just putting on that trade and always taking that next step and putting on that trade and sizing your positions properly to be able to hang on to something like that. These futures are leveraged. And so if you're leveraged a bit and you're going, something 100, 200, 300% at times, that can be a very big position. So also the importance, like you mentioned, and that's why I brought up that point, is starting out with that small position that doesn't keep you up at night, understanding that you're working with profits. All these things working together really helps you as a trader, especially a trend following trader.
Yeah, I don't think there's anything more important than understanding how much risk you're taking on and your overall risk budget. You want that to be very moderate. And you don't want to get into a situation where you have to do a lot of things quickly in order to survive and not lose money too quickly. And as you were saying, really the ability to follow your system is intertwined with your leverage and how big you're trading. And if you're trading too large, it will become impossible to do the next trade. So you could, as a novice or when you're first starting out, or for anybody really, it's almost impossible. No one trades too small. You never hear these traders, oh man, I just traded too small. I'm only up 10 or 20, 10 or 15%. But another thing I thought about when you were saying all of that is, what is the downside of taking that trade? I mean, it's so tilted in the favor of taking the trade. The trade, I know you hate to lose money. I know the last 5 or 10 times you did this trade, it lost money. But honestly, the downside of that trade is a 20 basis point loss, a 50 basis point loss, so small. And how many times I can tell you over the years, I have agonized on when to buy, where to get in, should I do it? And then the next thing you know, it's a really big profit and you never put the trade on. And all you were going to lose was a very small part of your capital. So that gives us this real superpower of never missing a big trend, which is the first commandment for all trend traders, is you cannot miss a trend. Don't have a filter. Don't wait, put it on and just see what happens and take your small loss. It's don't be too impatient. I certainly don't subscribe to the idea that if you put a trade on and it doesn't take off immediately, that tells you something. It doesn't tell you anything. No. Wait for your small loss. Wait for your breakout exit. Because essentially, I think if I had to choose, and this kind of makes a difference, it's a little bit of semantics, but really, I think when you have to choose, your bottom line is not, is the trend still going up? What's the trend like? Has the trend reversed? And all these trend-based questions, what you're doing is you're trading a systematic strategy. Now it is based in trend, and you have seen through this back test that trend is where you want to be, and you want to hold on to these mega profits. But you're essentially deciding your time frame and what kind of profits they're going to be by the parameters that you've chosen. this stop loss and this breakout exit or moving average exit. And if you can just not have any opinion on anything other than my exit got hit, I'm out, then you'll just be so much better off in the long run. I've seen trades that I put on and they don't go anywhere for a month. And then they turn out to be some of the greatest trades ever. Or you go home on Friday and it's this market you've been in, it is so strong. You're making so much money. The trend is so strong. And then after that, it just totally goes lower. And it was like made no money whatsoever. And you just thought, more trend is better. I mean, sure, if you're long, you're going to make more money, but it's not sending you a signal like, oh, double your position because look how strong it is. These really silly narratives that even trend followers will put onto their trading. Mm-hmm. You need to resist. There's just a lot less to trading than people think. You don't have anything going. You're not getting more information. You just know I did the back test, this entry, this exit, this stop loss parameter. It made some money on the back test. Hopefully it makes money in the future. I hope it does. I think it might, but we'll have to wait and see. But it's certainly your best guess or estimate for the future. Other than that, you really have to just, I love politics. I love economics. I love a lot of things. I love talking about things at cocktail parties, but keep that stuff at the cocktail parties.
Yeah. Great point. Oh man. And it's pretty funny too that you mentioned that, and yes, it even comes to the trend following space. I used to work with a guy who would tell me he knew what was a good breakout and what was a bad breakout. I'd say, how? And he'd say, oh, well, if you have trouble getting filled, it's a good breakout. If you don't have trouble getting filled, it's probably going to fail. Like just things like that are just absolutely ridiculous. And so many people kind of hang on those things. And like you said, it's not letting stories get in the way of your trading, not letting like what your beliefs are getting in the way of your trading. And that's a really hard thing, I think, for people to do, because we all have our own beliefs. We all have our own ideas, but kind of coming into it and going, okay, well, I like this guy or this country's doing this or whatever, so I'm not going to take this trade in my system because I think it's anti-American or something. I think it takes a while to break that in your brain in general and to kind of understand what you're doing without that. But as time goes on, it's, I don't think about any of that when I'm hitting a system, anymore. When I'm just putting on the trade, I'm just putting on the trade. I'm not thinking about what I thought last week. I'm not thinking about anything. I just know, hey, you should be long this. Hey, you should be short this. And that's about it.
Yeah, I think some of those ideas that you mentioned, like slippage and easy to get filled, hard to get filled, mm-hmm. I'm sure that's probably true in general.
There's probably something to it.
It's probably something to it. But what happens with these sort of ideas that happen more often than not is that if it causes you to miss a big, huge trend, then it's a loser, because, it's not just, does this happen 60, 70% of the time? It's that when it does happen or doesn't happen, you have to multiply that times the size of the move that you just missed. And boy, you're going to be very sad. Like, why didn't you buy crude? Well, I did buy it, but it was an easy fill, so I got out. Can you imagine explaining that to yourself? What is wrong with me?
And then your clients.
And before you start trading, you look at the charts and you look at the systems, and you're like, piece of cake. I just know I'll do this. And then it's all of a sudden, it's almost like when you start trading, this thoughts come into your head of all the reasons you don't want to follow and ways to make it better. Hey, it's good. It's great. I'm going to be a very rich person, but I think I can make it even better. And that's when you run into a lot of trouble, because you really need to be satisfied with something that's good enough versus something that's a little bit too perfect.
I think that's a thing that you bring up a great point, and I think that I notice that a lot with traders I'll talk to is that they almost want this perfect strategy, and then I'll watch a couple tell me, "Hey, I got this win rate that's 90%," and I go, "Okay, that's probably not real." I'm not going to say that, but in my head, I'm thinking that's probably not accurate. Then they'll show me, and it'll have like 9 trades in 10 years, or 5 trades even, and that's just not going to do it. It's not going to cut it in the real trading world. So having understanding that you're just not going to come up with a perfect system. You want 40% is fine. 40% win rate is fine. Most people think 40% is trash. 40% is fine, because if your winners are bigger than your losers, you're still making money. But most people can't, they don't want to just say, okay, that's good enough. And like you said, like you mentioned earlier, that you have different timelines. So, if you have a 200-day breakout strategy and a 100-day and a 50-day, this is a form of diversification in there. And maybe not all these systems are going to have they're going to have a 40% win rate, but some are going to win when others are losing. And this kind of helps to smooth returns, helps to find some outliers in certain areas that may not have found in another system. So I think so many people just are so focused on this perfect system that it kind of takes away from their trend following journey.
One of the things that was on the turtle test was this question, should a trader love their losses? And the answer is true. A trader should love their losses, because we should love any characteristic of this system. If this system has losses and drawdowns, then we should really embrace that and love, that particular aspect. It's like having a child that you love. And do you love these different characteristics of the child? They could be a little quirky. Like, of course I do. I love everything about it, because this is what makes that child.
Yes.
And
yes.
One of the things, and so you're like, I love it because of the back test. I love it because of my experience with it, and it makes good money and it's safe. And then all of a sudden you come along, and these parameters that you throw out there, 100 days, 150 days, 200 days, they had this really bad characteristic. Nice winning trades can turn into losses.
Yeah.
So that is just intolerable. And as a human being, you look at that chart and you're like, how did I give back all that profit? Well, you gave it back because you were dedicated to following your system. Well, all of my friends got out. They had a second or third exit that doesn't allow that to occur. And then our response is, look, all that is saying is, I'm going to overrule and override this system exit when I feel like it. It's almost like discretionary, systematic discretion. It's a bogus rule, but it's a rule. And it's just really there to make me feel better. And psychologically, I can handle a nice profit, not an outlier, but a pretty decent profit that all my friends are going to get. And they're going to report the numbers at the end of the month. I'm going to be the only one who lost money that month. You're the only one who's actually following a robust system. So you will win in the end,
Yes.
or close to the end. Hopefully not, you don't have to wait to the very end. But on an annual basis, I think you'll be very happy with that. So it's a narrow path. What we're asking clients to accept is psychologically so difficult that even traders can't even, people who this is their job, they don't even want to accept it. So you're asking the dentist, the doctor, the local lawyer who put some money into your fund, hey, you need to be like me and be tough and willing to follow the system. And they're like, it's rare. It's rare to find people who are just going to trust you to do the right thing and follow the rules. And so it's a narrow path. It has nothing to do with proper education or not understanding trend following. I think some of these people are like, oh, I understand it. I understand it so well. That's what makes me hate it.
Yeah. Then that's true. And I think anybody also, like if you talk to any person who knows anything about markets, they would tell you that, if you said volatility and drawdowns leads to opportunities, if I just threw that statement out there, most people would say yes. But if you come into a systematic trend thing and you say, well, the same thing, you got to handle your volatility because at some point those opportunities will come. Yes, that's going to happen. You're going to get stopped out. A lot of positions are going to go neutral, long, short, whipsaws are going to drive you crazy. But at some point, you're going to have these great trends and they're going to pay for all that time. And that's the truth. But once again, it's now you're saying, wait, you just got to kind of have this. There's no other word for it besides faith. You kind of had to have faith in your system. And then also, if you're hiring a manager to do that, you got to have faith in the manager and his system. It's a lot to ask for some people. I think the only way to really communicate it well is over time. If the clients that trust you over time seem to be the ones that are like, okay, I do get it now. Because they're seeing it, they're able to kind of understand it in some way. People just telling them about it, your first meeting, it's a tough one. It always makes me wonder how many firms out there are actually, systematic, but they come up with ideas to to say, hey, we bought wheat because of blank, or we bought oil in 2020 because of this sentiment reading. And, it makes you wonder sometimes if they BS their way through things or not.
Yeah, I mean, I think you will. I think if you went back and did a back test on long-term trend following, using some of the parameters that you mentioned, that allows you to hold on to some of these long, big trades for a year or two. I don't think you'll find a lot of track records that look like that. You're not going to say, wow, I did this back test with the 150-day breakouts. And I Googled like CTAs, and there's a lot of CTAs who have the same great track record. Like none. So I think that's something that you can aspire. You're a young man, so you can do that. It's in your power to create a track record that you can be very proud of, that I've never seen a track record that looks that good, honestly, that makes that kind of money, because honestly, you're really asking people to do something that's really almost humanly impossible. And, but I think coming up and trying to uncover the best parameters is pretty easy compared to choosing those parameters. You were saying something earlier about something that Rich would say a lot, is that I think I can print my rules on the front page of the newspaper and no one would follow them. And I think there's two parts to that. And we've kind of talked about it, but one is it's too hard to do. It's too hard to do. I don't like 40% winning trades and big profits turning into losses. But another component is I'm not going to do it because I don't like it. I disagree with it. I'm going to do something else. I don't need to create a system that's so hard to follow.
Yeah.
And that's the second part is the most frustrating to me. I get it if you can't do it, then admit it and move on and become an accountant.
Yeah. I think a lot of people kind of get hung up on you read a lot, you learn a lot, and you want to use those things that you learn. And I think it even took me time to kind of, because I didn't start out a trend follower. It took me time to kind of beat that out of me of, one day I remember I built all these systems and I was still kind of this hybrid thing. And I remember looking at it and going, my systems are kicking my ass right now. Like they're way outperforming me. What am I doing here? Doing this, hybrid type thing at the moment. And so that kind of changed me. And I think a lot of people kind of get stuck in that forever, where they want to use their brain. They want to, why can I can see the markets moving. I can see natural gas. I can see heating oil. I can see all these things moving this direction. So that's going to lead to blank. And instead of waiting for a signal in blank, I'm just going to take blank today because I know something. And I think in general, like, the best traders I know feel like they don't know everything about anything. And so they kind of, it's easy to sit back. To me, it's a lot easier to sit back and say, yeah, maybe that could happen. And maybe my brain will put something together, but waiting for that signal is a much easier way to do that and more profitable.
And, more consistent, just following the rules. Even if the system is not that great, it's going to put you in an elite class of always doing the same thing every time, every opportunity. So yeah, I think I lost my train of thought. I had this really. Oh, I know what I wanted to say. Yeah, 10 years ago, people started to say we need to add things to our trend following, and in order to continue to make an incentive fee, 2 and 20, 1 and 20, we need to offer more things to our program other than just trend following. So trend following was becoming, a management fee only, no incentive fee, for at least for institutions. And so they would sometimes run both programs together. So they would keep the trend following only, and then evolve into adding mean reversion, carry trade, short-term trading to the program that was going to get the incentive fee. And lots of times, the poor old plain trend following would outperform the fancy program that was charging 2 and 20. So you got to be careful, how you put these things together. You don't want your old beat up trend following to go up against your best ideas. Becomes sometimes you don't even realize your best idea is just to do the trend following.
Yeah, that's what you just said is honestly the toughest part, and I think something that so many people deal with is just letting it be. That doesn't mean you can't backtest. It doesn't mean you can't come up with different ideas, but just kind of letting it roll the way, like, you have this system, it's built the way it is, following it, learning to really love that system, understanding that you can also build other ideas separate from that system if you have a problem with giving up too much. Let's say you have a problem with giving up too much returns. Okay, so, well, I guess we're going to make a little shorter term entry system then. You could build tons of things on top of it. Now, that's not something that I'm going to do. But some people might want to do that, and you could probably smooth your returns by doing something like that. It might feel better for you because we're all different. Not all of us could handle like you or I. If you were in that, I think if you have Bitcoin in your system, right?
I do Bitcoin futures. Yes.
Yeah. So I have Bitcoin futures in my system too. And last was that 2020, that trade in Bitcoin was such a monster trade. And coming into all those profits in that position, I think what did it? I think it 5x at some point if you bought that breakout to it, 4 or 5x. That's a huge position in a portfolio. I'm not saying everybody can take that type of volatility, but I'm saying that instead of cutting down that position, maybe you have a different system that has a different exit and so on. So there's lots of different ways to kind of do that.
Yeah, I mean, I think if I started at the top. I'm trying to be a humble, nice guy here, but that's one of the secrets of the turtle story that doesn't get enough press. We learn from genius people in every way. I've not met any other CTA or heard any other CTA in 35 years that I thought, oh, okay, that guy reminds me of Rich and Bill. No, never. They act like they do, but they don't. And so we started at the top. So if you didn't start with Richard Dennis, then yeah, you probably have a lot of research to do.
Yes.
I want to come across as really nasty right here because
but it's true.
It bothers me that people think that the markets are always changing and evolving. So trend following needs to change. That's one of the things that's great about trend following is it naturally evolves. Parameters are not too close and more suited for trends and chart patterns that we haven't even seen in the back test, they kind of allow the market to open up and do what it's going to do, then, trend following is the perfect strategy for markets that are not only changing and evolving, but markets you've never even seen before. But this whole idea that you need to hire PhDs to improve the trend following, it's kind of just a marketing ploy and not being honest with the clients.
Yeah.
But if you don't know what you're doing and you didn't work with Richard Dennis and learn about sample size and diversification and how important it is to have very few parameters, and then you're probably going to need to do a lot of research. Go for it. Me, I don't have to do a lot of research. I was given quite a bit of knowledge to begin with.
Yeah. I mean, it's a road, and at the same time, there's so many people like yourself who put out these great informations. You mentioned the Top Traders podcast. All of these are putting out amazing information all the time. You can listen to it weekly. You have all types of trend following traders on there talking about what they do. And honestly, the most open community in finance that I have found over the years are the trend followers. Most of us will tell you what our systems are. It's not rocket science. It's not anything insane, but most of us talk pretty openly about these things. And I feel like a lot of people don't really reach out the right way. They kind of come across and say nasty things before kind of just being like, hey, how exactly do you do that? Like you mentioned earlier, you have a conversation with somebody, you say, I do this way, and they go, well, that's not correct. It's, you've been doing this long enough to know that it's correct for you and it works well for you, and it has worked well and made money and been proven over time. So, instead of saying anything, sit down and shut up and maybe listen. And then also use all of your resources out there, these books. There's tons of books on trend following. There's tons of podcasts by trend followers. So there's lots of resource out here. And you just mentioned you do spaces every Friday as well.
I think another thing that I've always been concentrating on is building my trading philosophy with broad general rules, like the 10 commandments of Jerry's trading.
Yeah.
And so when you're hit with these ideas that you've never heard of before, you don't need to reject them, but you can kind of filter them through. You know what's important. We've mentioned probably all of them already today. Yeah. And so sometimes you hear ideas, you're like, darn, that does not violate any of what I know to be true. It doesn't mean you can't alter those 10 commandments. You may have to do a constitutional amendment. I'm mixing up metaphors here, but to something,
It makes sense.
Yeah. And so I have been on Clubhouse and podcast and Twitter Spaces, and people have said, hey, Jerry, I listen to what you say, and have you thought about this idea? And I'm like, oh my gosh, you're right. You're right. And that my way has not been consistent to what I believe about the markets and trading and trend following and back testing and statistics and sample size. And you're right. I need to go back and so as kind of rude as I'll get, on some of these podcasts, like, I don't think I've ever met a person who's more closed-minded. Maybe. I certainly think I come across that way. I like to be passionate, and I like to kind of be extreme and state things in kind of an extreme way to get a rise out of people. But also, boy, if you can out-argue me, if you call me out and I have some blind spots, I'll admit to it right on the spot. I've done it before. Yeah. And as soon as I got off the podcast or the Twitter Spaces, I have called up my research guy or the guy who runs my trade sheet and said, hey, we got to make some changes. I need to correct that. So you just got to be adamant both ways. You got to stick to it, but you got to be honest to yourself and let your conscience guide you and say, these people are making some really good arguments. And I need to reevaluate. And so I feel like I do a pretty good job of that because, I hate to lose. I hate to lose. And so I'll change my mind in a heartbeat if I think it's going to help me be more successful.
Absolutely. Well, on that note, I don't want to take too much more of your time. Thank you so much for being willing to come on and talk with me. This has been a great experience, always learning so much from you. Where can our listeners find more of you, Jerry?
Well, definitely on Twitter, RJ Parker JR09. And so I tweet a lot, and I have the Twitter spaces Friday mornings at 8. And then ChesapeakeCapital.com. Yeah, and so my direct messages are open on Twitter. And so, yeah, let me know if you find something interesting or you have some more questions. And but thanks for having me, Jason. It's been fun.
Of course. Thanks for coming on, and we'll make sure to put those in the show notes. Thanks, Jerry.